The Canadian dollar is making lost ground on the US dollar over the course of the last week and a half as we see a similar bounce in oil prices. Now, the US dollar has rallied strongly from around the 130 levels against the Canadian dollar up to around the 133.50, 134 levels. As you can see on the chart right now, this has historically been a major area of resistance. In fact, over a number of months now, this pair has range traded between this kind of 130 to 134 region. So as we approach the upper end of this range, it was clear that there was going to be a big test as far as the bulls were concerned. Fortunately for the Canadian dollar bulls, this coincided, the peak of this pair coincided with a strong rebound in oil. Now, oil sold off very aggressively over the course of the last month on the back of easing geopolitical fears, which were heightened at the start of this year, but also followed then by the outbreak of the coronavirus in China. China is one of the world's, if not the world's, largest consumer of oil, and this was guaranteed the outbreak of coronavirus to weigh on economic activity in China, at least over the course of the opening quarter of the year. So while the longer term challenges don't necessarily remain the same for oil as they are right now, it does have a direct impact on near and medium term demand for oil and oil inventories. So that's why we've seen far more of an impact really on oil prices than we have potentially seen in other markets. But over the course of the last week and a half, we have started to see a change in attitude around coronavirus. The numbers would suggest we're starting to see a deceleration in the number of new cases of coronavirus, even as the toll continues to tick higher, even as the death toll now surpasses 2,000, which is more than double what we saw, for example, with SARS. Now, we obviously remember a month ago, the fear was that this was going to be as bad as SARS. It's obviously got much worse, but this deceleration is important because that suggests we are seeing a turning point in this, so people can start to see a brighter outlook. And with that improved outlook has come a rebound in oil prices, and as a result has therefore come a rebound in this dollar CAD rally. We're now pulling back towards the kind of 132 area at this moment in time, pulling back from 133.50 highs. If the outlook continues to improve as far as the coronavirus is concerned, if risk appetite continues to improve in line with this, and if the oil prices continue to rebound, then I would expect to see similar ongoing moves in the dollar CAD pair. Obviously, the next big test for the dollar CAD pair could come around the 132s, then 131 below, and then 130 below here should we reach back those levels. But I think it is also worth highlighting here that the rebound we're seeing in this dollar CAD pair currently is being strongly driven by those rebounds in oil prices, because the US dollar is continuing to perform well against other currencies throughout this period. It's just against the Canadian dollar where we are seeing a little bit more weakness in the US dollar. So it may take a little bit longer for us to start moving back towards those kind of lower boundaries again. The next big test as far as dollar CAD is concerned is the 132s. The most notable takeaway from this, though, is that if we do continue to see improvements on the coronavirus front, then that 133.50, 134 level may continue to be very well protected, as it has done over the course of the last few months.